Whoa, welcome back to Infant Investors, the home for all new and non-investors. You know my name by now. And today I'm going to do a video on how I select stocks 2020 style. Listen, shout out to Johnny Westby. He left me a comment in my last video talking about, Curtis, can you do an updated video for 2020 on how you select stocks? And initially I thought, you know what, Johnny, listen, mate, I don't think right now is the right time to be doing this kind of video just because of the whole coronavirus situation. I thought it wouldn't get the time and the shine it deserves, and that you'll get lost in all of the other, crash fear mongering headlines that's out there right now. And then, I slept on it. I woke up, had a chamomile tea, and I thought, actually, Johnny's got a point. This could be the right time to do this kind of video while everything is crashing, while people are losing a lot of money, while there's a lot more buying opportunities in the market. It could be a good time to refresh our mind and understand how I select stocks, and also give you guys a catalyst into potentially how you guys can figure out selecting stocks. So if you want to know more, like, comment, subscribe, help the channel get to 5k subscribers. How we can get the word of investing out to more people. Listen, I've got another video called the most important investment video I'll ever make. I still think that was one of the most important investment video I ever made. I'll put that link in the description. That goes into one and a half of these methods in a bit more detail. I'm going to try and keep this one a little bit more succinct just to give you an overview, and then obviously you guys can go play around yourselves, pause, and then obviously get in the comments if you've got any questions. So the first way that I like to select stocks in 2020 is using Finviz Maps. Listen, if you guys don't know this website, I talked about it in my 14 stock websites that I like to use. Finviz for me is an incredible resource to understanding stocks. And when you go on the Finviz website, you've got this tab called Maps. And when you go onto Maps, there's different filters of different things that you can basically see. And effectively what this section is a heat map of the performance of various stocks in various categories. And for me, this is just a great way to kind of get a snapshot of what's going on. But this is just the start of it. So at the moment, we're on the S&P 500. You could go to, say, world and look at, different regions in the world. Alibaba in China, you've got stocks in the United Kingdom. And then you can go to full, which has got, a lot more. This shows you all of the different industries and sectors. And then you can go to even exchange traded funds for all of you ETF heads out there. This might be, something that you want to look at. QQQ, which is the whole NASDAQ. And yeah, whole bunch of ETFs. But I'm going to go to the S&P 500 because obviously I like picking stocks. And here you've then got another filter where you can actually filter the stock by. And this is really starting to annoy me. So when you do that, you basically scroll down and you decide, what's the thing that's actually important to me? And this is all about the fundamentals. It's something that I go on about all of the time. It's all about the fundamentals. You should be looking at the fundamentals. So for example, PEG might be important to me, or analyst recommendations might be important to me, or float short for whatever reason might be important to me, or maybe, I don't know, 3 months performance might be important to me, or 1 month. So let's say if I go to 1 month performance, yeesh, you can see obviously it's very red. And this might be a way that I start to look at some of the stocks that have gone down quite considerably, and potentially look at them and see, actually, have they gone down a little bit unfairly? Is this a potential opportunity? You can also look at stocks and see, why is every stock, while every stock is red, there's some stocks like Gilead Sciences that's actually doing well. So maybe, healthcare could be a sector. If you think this corona situation, for example, is going to last for months and months and months, maybe it shows you some opportunities of healthcare sector stocks that could be going on the up and up. But what I personally would do, I would like to buy stocks on the way down, personally speaking, if I'm looking at the performance. But obviously, if it's a bullish market, then, that's going to vary. I don't mind buying stocks going up. It all kind of depends on the situation. The stocks that's sort of bigger and larger, it's just simply based off market capitalization. So obviously they have the biggest market cap, so they've got a bigger share of the heat map, and obviously the smaller ones have a lower share of the heat map. But you can see things like AMD here. You can basically click on that. You've obviously got that hover over here where you get a bit more information, but if you actually click on that, then you can go into a bit more detail about AMD and actually see all of their fundamentals and all of the other stuff. But I just really like the heat map view of that specifically. Not only that, from the 1 month situation, you could look at something like, say, analyst recommendations, and then it gives you a score. So this score basically tells you if it's a 1, it's a strong buy. If it's a 2, it's a buy. If it's 3, it's a hold. If it's 4, sell. 5, strong sell. So it gives you an indication of what analysts are feeling about specific stocks. So you can see here that Amazon is between a buy and a strong buy, but obviously it's closer to a buy signal. Let's see if we can find a strong buy in amongst the greens. I'm looking. I don't really see a strong, like, I'm looking for like a 1. I think it's actually 1. Let's go to world and see if there's a strong buy among the greens here. See HSBC. So right now HSBC here is a 1. That's basically a strong buy. You got here TM, Toyota Motor Company. That's a 1 at the moment. RelX, that's a 1. Vodafone's a 1.3. So you've got a few stocks here that's a strong buy. Barclays here, that's a strong buy. So that can just give you an indication of what analysts are feeling. And then obviously I see this as a first step to kind of filter some opportunities and then actually go into a lot more detail for those specific stocks that you might like. Another thing you might be interested in is, say, a part of the fundamentals. So maybe you're interested in, I don't know, PEG. Let's say you're interested in PEG ratio, then obviously, you know, I've got fundamental series. I'm not going to get into what this PEG means. You guys should know. And if you don't know, get to know. No, I'm joking. I'll put the link in the description of the PEG video, and that will explain what PEG is and how it all works, etc. But you can basically look at for filtering by that score, etc., etc. What I'll also put is this link. So if you want to know what any of those different filters mean, this basically tells you a nice clean sentence what those filters mean, just so you can make sense and understand some of that information. So that is one of the first ways in 2020 that I like to just have a bit of an overview about stocks, and then obviously go into it. Now, one of the limitations that I will be honest with is that from a UK standpoint, just because the majority of you guys are from the UK, they don't really have that many stocks. So you can see things like Barclays and Vodafone here. That's just because they are listed on international stock exchanges as well. If I, for example, was to try to search for Aviva, it comes up with nothing. If I search for Legal and General, it comes up with nothing, and many other UK stocks as well. So it is a little bit limiting from a UK standpoint, but obviously from a global standpoint, international standpoint, it's a pretty good way to kind of look at stocks and look at potential opportunities. But like I say, you need to dig deeper once you've done that. The second way, which I'm always going to talk about, is Simply Wall Street. There is a free version of Simply Wall Street if anyone is asking out there. I think they've got a limitation in terms of you can only track 6 stocks in your portfolio or something along those lines, but I think if you're doing research, you're able to basically look. But I have the paid version, about $80 a year, and I'm pretty fine with it, to be honest, because it does 2 purposes. It helps manage my portfolio, let me understand what my performance is saying, but also it gives me the opportunity to basically find and discover new stocks and new opportunities, either based off my portfolio or just randomly in its entirety. So, you know, one way that I might discover new stocks is I click on this Discover tab, and then basically it has all of these different collections of stocks that I like to say, and I might have a collection that's important to me. So as an example, a collection could be upcoming dividends. For all you dividend guys out there, upcoming dividends might be an important collection to me, obviously filtered by the United Kingdom. And as we can see, Legal and General is right here as an upcoming dividend. Obviously I already hold this stock, but let's say, for example, one of you guys don't hold this stock. You can go down and you can actually see that Legal and General does have an upcoming dividend. Where is it? Where are you, little bastard? There it is. And it basically tells you that on April the 23rd is the ex-dividend date. So the ex-dividend date is the date that you need to have all your shares in buy, and then that will mean then you will get a certain price per share on this date right here, your pay date, etc. So that's a way that you can potentially start to discover stocks by the different little collections that might be important to you: aggressive stocks, defensive stock, undervalued tech stocks, etc., etc. Another way that I like to look for stocks here is by actually doing a screener. Sorry, let me go on to the screener. So I've talked about this previously. You can basically filter different options that's important to you, and then effectively from that standpoint you start to get a collection of stocks. So you might say, you know, filter by market, I might go United States, and then I might go United Kingdom. That's, say, the two markets. Filter by industry, I might not have a preferred industry for whatever reason, and then in this section I might care about, you know, PEG ratio, and the PEG ratio needs to be, I will let it be, I don't know, between 0 and 4. As an example, I'm just going to do this very quick. Debt to equity ratio, I want a low debt to equity ratio, between 62%. That's quite high actually. Let's make it a bit lower, 42. And then dividend yield, I want a dividend yield of at least 10%. No, yeah, 0.0 and 2%, 0 and 3%. Let's say that, for example. Done. I'm just going to say that. It's probably going to come with nothing. And then based off that, 192 companies have basically been found, and this is another way that I could potentially find stock. So I'm looking through, you've got great names like Nvidia, Nike, Accenture, names that we all know, but obviously you'll find stocks that potentially you won't know. And I think that's quite the exciting bit about the market, is actually finding those things that you don't know. And it's like, actually, have I stumbled on a really nice opportunity here? And I think Simply Wall Street allows you to do that in probably one of the most simplest ways that I've personally come across at the moment. But I might scroll down and be like, you know what, Associated British Foods, let me have a look at that. And then obviously what I would simply do is just go and review everything. All of this is just corona related, we know this, but I might look at its past history and be like, I'm not a bit fan of its past history, even including dividends. You know, you'd be losing money with Associated British Foods for whatever reason. Looks a bit undervalued, but can you trust that in its full extent? Future growth performance, I might look at all of the different fundamentals, as you might see. Debt to equity ratio, its dividend yield, and then obviously decide whether or not that this is something I want to look further into. All of the stuff I'm showing you today, by the way, I'm going to be crystal clear. This is not, I do not make a decision of Simply Wall Street or Finviz. Once I actually find a stock, and I've talked about this in the previous video that I'll put the link in the description, the most important investment video I'll ever make. Once I find a stock, I research the heck out of it. It probably takes me about 2 to 3 weeks just to get all over it. So I will be going on Google, I'll be going on their website, I'll try and understand their business model, try to understand their CEO, their background, their products and services, how they're making money, you know, any news headlines, things I should be worried about. Obviously, if it's something that I really want to believe in, I really want to back, then that's what I'm going to do. I will typically do that I'll do more research for stocks that I know the least about. Hopefully that makes sense. So if I know more about the stock organically, just because it's something like Apple or Microsoft that is in the news every single day, then yes, I might not do as extensive research, just because I've got a pretty fair and strong understanding of the stock. But if it's a stock like, as an example, Taylor Wimpey, I never knew nothing about Taylor Wimpey when I stumbled upon it. I saw the fundamentals, it appealed to me, and then obviously I did a lot more research about the stock, and then decided that, you know what, I feel like I'm going to invest into Taylor Wimpey. So that's my approach. Obviously everybody's different. The third way that I like to look is, this is the hard way. This is the hard way. You got to be built for this life if you're about looking for stocks in this way, because you know what? This is the hard way. This is the longer way. But actually, I think this means that you won't potentially miss any opportunities. This is what I did when I very first started investing with a free trade. And, you know, when Robinhood eventually gets their act together, I'll do it with Robinhood as well. And I probably need to do it again on free trade. I have been, you know, I did do a series on, you know, free trade's top stocks, and I was doing this on a weekly basis. And it wasn't just for the channel, it was for me as well, just to see if I can find opportunities. But free trade, in all their glory, basically put up a Google sheet which has all of their stocks. It's called Free Trade Stocks Universe, and you can see obviously there's some lovely people right now on this Google sheet. And what I basically do, I copy this into my own personal Google sheet, the list of stocks, and then I basically put different tabs. I'm just going to show you here roughly. I might put a tab that says, it won't let me type actually because it's locked, it's view only. But what I do, I might put a tab that says PEG ratio. I might put another tab that's debt to equity ratio. I might do undervalued, and I might do earnings, and I might do dividend percentage. whatever metrics is important to you. I'm just trying to illustrate a point that irrespective, it's just all about the metrics that's important to you. Previously I had my own metrics. I gave that sheet out to everyone. You'll find it as a link in the description of the other video. I'm not doing that this time round because what I don't want to do is encourage my criteria and impose that on people. I want you guys to have your own criteria, figure out what part of the fundamentals are important to you, whether it's PEG, whether it's debt to equity, whether it's dividend yield, whether it's, you know, growth over the last 1, 3, 5 years, whatever it may be. Figure out the 4 or 5 fundamentals that's important to you, and then I literally go through each stock and I basically plot that. Sometimes I also have a conditional formatting as well, which basically then gives me a little bit of a heat map, similar to the heat map that you guys saw here. I would have potentially a little bit of a heat map, which would say, oh, you know what, the PEG ratios are green for these stocks, red for these stocks, amber for these stocks, etc. And then based off that, I would then pick the ones that fit the fundamentals that I like, and then I would go and do more research about it. The way I would get that fundamental information, well, it's pretty simple. I can go to Simply Wall Street, that pretty much has all of that information, but you can go to free sources as well. You can go to Morningstar, has that information. You can go to Hargreaves Lansdown. If you just Google the stock and PEG or whatever, you will find a lot of this data is readily available for free. You don't need to pay any tools about that. So the links I'll leave in the description is the 14 stock market websites that I like to use. I'll put the most important investment video I'll ever make link in the description, and I will also put the PEG ratio, just, you know, because we talked about it. But yeah, that's the way that I like to start looking for stocks as well. Obviously, naturally, there's going to be other ways that I'm going to find stocks. Some of you guys are going to give me stock recommendations. Some of you guys in the DM talk to me about stocks. I look at it and I'm like, that's interesting. I might be watching CNBC or Bloomberg or something, and then they talk about a stock, and then I want to go look into it. So listen, there's obviously going to be a plethora of ways to, you know, be accustomed or to find out about stocks. However, if you, for example, have no idea what stock you want to invest in, these are 3 ways that you can start to trigger your own research about stocks. Now, obviously, if you're not invested with free trade, then I would encourage seeing if your broker has a full list of their stocks available and doing a similar thing. Typically, most brokers won't have, you know, the same level of, you know, financial research as they will, you know, the effort that they put into actually the brokerage services. But I do find there are some brokers like Hargreaves Lansdown who give you a lot of information. Trading 212 do that as well, pretty well. So there are some brokers that you don't need to go into different places. You can kind of get that stock market information right there. Currently, you can't with free trade too much, so obviously I go to other places. But you know what, some of those other places have, you know, a really good platforms, which I like to do. So yeah, that's how I like to look for stocks in 2020. Those are the 3 ways that I generally will start my journey. And then once I find the stocks that fundamentals kind of match what I'm looking for, and I like their business and what they're on about, then obviously I'll do a lot more research into the business before deciding, you know, if I'm going to pull that trigger. I hope you found this video useful. If you did, like, comment, subscribe, help the channel get to 5k, and I will catch you next time with another investing video. Take care, guys. Peace.